Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com talks about the explosion in pot stocks, the Dow hitting an all-time high. Trends Journal publisher Gerald Celente believes gold is near its bottom. He believes the tariff war between the U.S. and China is not as bad as many think. He looks at marijuana, NAFTA, and the huge U.S. domestic debt. Wall Street Window's Mike Swanson looks at what sectors are hot, including defense, uranium, and marijuana. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Always good to be with you, Jim.
Marijuana stocks, could they get higher or lower?
Well, it's a lot of both right now. I mean, this unbelievable week that we've just gone through. Typically, you'll find one or two stocks in a sector that might be running, but this marijuana group have just exploded in the last 2 weeks. And Tilray, which basically did an IPO back in July at $17. It's got a NASDAQ listing, so the Americans are really interested in it. My gosh, this thing hit $300 this week. So we got from 17 to 300. Becomes, its capitalization at that point was bigger than 100 of the stocks in the S&P 500. So these excesses, this euphoria, in anticipation of the legalization here in Canada, is just, it's getting out of hand from my perspective. And, so Tilray there is an example. Peaks at 300 the middle of the week, closes off the week down at 123. And there's just too many of these things that are participating too strongly. So I think this is going to be a buy mystery and sell history as far as this sector is concerned. We need a big breather, and the first corrections, we're starting to see them in a number of the stocks, are coming back down, through their 20-day averages and bouncing. And if these bounces then start to fail, if they don't correct back quickly, 60% of their original breaks off their highs, it's going to be looking like a distribution pattern, and we'll probably have to take time to build some longer-term bases, like we saw a year and a half ago on stocks like Canopy. I mean, it spent the better part of 6 months building a base for this most recent run.
We have Statistics Canada anticipating $1.2 billion in pot sale revenue in the fourth quarter. Is that enough to go around with all these different marijuana companies?
No. I mean, if you take a look at the potential here in terms of the earnings in the first year or two, there's no way that these capitalizations will justify and the earnings will justify the PE ratios that we're looking at right now. It could very well be that this is like the internet craze of the late 1990s, early 2000, and you're going to have this massive clean-out phase. I mean, it's definitely going to happen, and there are going to be big winners out of this over the long pull, and we're talking, maybe 5 or 10 years. But the volatility that we're seeing now, is, to me, it's reminiscent of what we saw at the height of the dot-com craze, and it's going to take time to literally weed out the stable companies here, and there's going to be lots of mergers. We're seeing them already, and you're going to end up with a smaller and smaller group of names to be looking at. For now, probably, the safest way is to be doing one of the ETFs. There's a couple of them out there that you might take a look at rather than picking individual stocks, because you might be lucky and get a home run like a Tilray, but you could very easily end up with ones that go by the way.
On the traditional markets, we've seen all kinds of highs in the past week. Can you tell us about it?
Yeah, well, it doesn't matter really what we're looking at. There's been a rotation, sort of away from the NASDAQ stocks, which have been leading on the upside, the FANGs in particular. And we've seen this rotation that's been happening towards industrials. And, the Dow had a potential Dow theory sell signal sitting in the offing, with the transports having been up to new highs for months now, and the industrials lagging behind. Well, this was the catch-up week. The Dow ending up at new highs, all-time highs, and a fair amount of that probably coming from the fact that the tariffs that are being put on by the Americans, we're looking at a 10% tariff now on this next group, rather than what could have been as much as 25%. And that's provided some good life as far as the industrial sector was concerned. And take a look at the commodity side of the equation there. The price of copper this week traded down as low as $2.60 the early part of the week, closed off the week at $2.85. So you've got just a really good looking reversal there, and that's probably likewise indicative of the trade talks, and the fact that the Americans aren't being quite as harsh as they may potentially end up being, but at least negotiation can continue at this point. And interestingly, in the copper, we had downside targets when we were up in the 3.25 range. We were looking for 272 as a good downside. Overshot that, but we've been basing out here for the last 2 or 3 weeks, and this is very, very similar to some of the other major breaks that we've had over the last 3 or 4 decades. You get this hard break to a measured target, and the target is based upon the size of the distribution that's above you, and that becomes the driving force to the downside when you break your support. So targeting 272, basing out, we're probably looking at another month or so of this basing, taking that 285 rally that we ended up this week as maybe being a bit of an anomaly. But looking at this is now probably halfway through a base that can provide some upside price action.
Could the BC forest fires and the hurricane in the U.S. boost lumber prices?
Well, the lumber producers will be hoping it does. And we've gone from a $640 price on the Random Lengths contract down to $340. And it's now getting very, very good oversold readings. I got capitulation reading as of Friday's close in the nearest futures contract. So I think there's an extremely good chance here of a bounce from a technical perspective, and the hurricane aspect of it, the rebuilding that's going to have to go on, the demand for product, and the Canadian product especially, should be enough to provide us with a pretty reasonable bounce. I would think maybe in the vicinity of a $60 or $80 bounce off the lows that we're looking at right now.
Ross, thank you so much for chatting with us.
Pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Trends Journal publisher Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Well, thanks for having me on.
Gerald, we're hearing about a potential short squeeze in the gold and silver markets. What are you hearing?
Well, it's not what we're hearing, it's what is. And right now, there's a lot of shorts going on with gold and have been for a while. So our forecast, however, is that gold is near the bottom, and we don't see it going much lower. And as long as the dollar stays strong, the reality is gold is going to weaken. And there's pressure, however, that with the Fed raising interest rates and other currencies declining as rapidly as they are, this may cause a great financial contagion that may upset the trend of rising interest rates in the United States. Because when you go to Europe, they didn't raise theirs. They're not going to raise them again until maybe the summer of 2019. So you have the Eurozone, the European Union actually, in negative territory, Denmark, Sweden in negative territory. You have Japan in negative territory. And even with the rate rises in the United States, you're only looking at an overnight rate, a federal fund rate of 1.75 to 2. And in Canada, what do you have? A 1.5. Australia 1.5. So the point that I'm making is that we look at this as a temporary move with the United States because these other countries can't raise rates because their economies haven't grown. Matter of fact, a report just came out about one of the biggest firms, recruitment firms in Europe, and their numbers just came out and they're way down because there's a slowdown, they're saying, in the economy. So rates are going to decide where gold's going to go. The shorts will play the way they want, and that's only a temporary hit.
In Canada, employment insurance applications went up 2.4% in July. In the U.S., the official employment numbers are at a 48-year low. Are those numbers really true?
They're true to an extent. In the United States, for example, though, once you're no longer getting benefits, you're off the unemployment rolls, you're no longer counted as unemployed. So you're looking at a labor force participation rate that is very low. It's the 1960s levels. So the labor force participation rate is really the real number. And again, they don't count the unemployed once they're no longer getting benefits. And also, yes, people are working, but they're not earning. And the numbers just came out again in the States. And one of the reasons why wages are going up, or income, I should say, is going up, is not because of wages. It's because people are working longer hours and have more jobs. So it's still a very weak economy, only sustained again by cheap money and tax cuts in the States.
Will the tariffs offset the revenue lost by tax cuts?
We don't think the tariffs are going to be, the talk of tariffs is bigger than the reality. When you look, for example, at the tariffs that the United States is going to impose on China, you're looking at only like 0.6% of their GDP. So the tariff talk, the trade war talk is more talk than action. And in reality, who would do business if, you're doing business, if I'm doing business with you and I'm making $350 billion more than you are you going to tolerate that? Or are you going to say, no, this game has to change? So it's going to be a game changer because China is not going to give up a lucrative market, nor is Canada or Mexico. So there's going to be renegotiations of deals that were unfavorable to the United States.
Could these rising interest rates and tariffs cause emerging markets and their currencies to collapse?
Well, not the tariffs as much, but definitely the rising interest rates. You're already looking at emerging markets. The whole sector now is in bear market territory. Nothing to do with tariffs. Has to do with the declining economy and also the rising interest rates. Again, you're looking at the Indian rupee at an all-time low, the Turkish lira, the Argentinian peso, the Brazilian real, the Russian ruble in decline. How about the one that South African rand? Oh, they're in recession too. So it's rising interest rates and slowing global economy. And now what's happening, though, is that as they raise their interest rates so dramatically as they have, that slows down their economy even more as the cost of borrowing rate gets higher. So this is what we're saying. That's one of the major issues to look out for the contagion effect of that.
Could this policy then be a boomerang that comes back and hits the U.S. in the teeth? Again,
we don't see it we do not see the tariffs and trade issues being a major factor, but the rising interest rates, it's not only going to hurt the United States because of what's going on in other countries, it's going to hurt it here too. As I mentioned, you're looking at really very slow growth, and it's only being propelled by cheap money and tax cuts. So now, if you raise interest rates, what's going to happen to your real estate market? What's going to happen to your retail sector? What's going to happen to the equity markets and mergers and acquisitions? What's going to happen to all the debt, that $250 trillion in debt out there that has to get paid back globally when interest rates go up? So that's how it hurts.
Are tensions building in the Middle East, and could they affect oil?
The tensions are dramatically rising in the Middle East, and they're going to rise even more. Look what's going on in Syria, the Russian plane that was just shot down that they're blaming because the Syrian missiles were firing at incoming Israeli missiles, and news reports showing that hundreds of Israeli missiles, according to the Israeli government, have been fired into Syria over the last year. And there's the issue with Turkey involved in there, Russia, Iran, the United States, also it's Saudi Arabia, Yemen. The Saudi war in Yemen is the international disaster, civilian disaster according to the United Nations, the number one. And that's going on unstopped. So add on top of that, the tensions growing between Saudi Arabia, Israel, and the United States against Iran, Trump's sanctions on Iran, and the oil sanctions are going to take heavy effect in November, and that's going to cause oil prices to spike even higher. So if we see oil now, we're looking at Brent crude, hovering a little below the $80 a barrel mark. If war breaks out and spreads into Iran or with Iran, you're going to see oil prices spike above $100 a barrel. Go back to the last 5 recessions. They were all preceded by rising oil prices. That's our concern at the moment. And I mentioned before about what's going on with emerging market currencies. Many of them are going down. And I mentioned the Indian rupee. You look at the Chinese yuan. China's the biggest importer of oil in the world. Their currency's going down. Oil's based in dollars. They have to pay more for their oil and energy. India, 80% of their energy is imported. Their rupee is at an all-time low against the dollar. Higher oil prices, declining currency means, very simple, major economic downturn globally.
President Trump just tweeted demand that OPEC lower its prices now. Is that possible looking at the world market?
Yes and no. It's hard to say because you have so many production problems going on that may not be able to make up for the loss of the Iranian oil. It's going on in Venezuela, Libya, Algeria. And even you're hearing from Saudi Arabia and Russia that they may not be able to make up for the shortfall if the sanctions, and it looks like they will, take hold against Iran. Although you're hearing from nations such as China that they're going to continue to buy Iranian oil regardless of the sanctions, that's not the truth. In reality, you're seeing cutbacks coming. So Trump could tweet all he wants on this one. It's a supply and demand issue. If the economy slows down globally and there's less demand for oil prices will fall. If the economies don't soften, if there's sanctions on Iran that take effect and there is not enough coming out of OPEC to make up for the shortfalls, the prices will rise.
Does the U.S. dollar look like it's going to continue to strengthen?
Yes, it does. The dollar's rising because there's no competition out there. Period, paragraph. What do you got in Europe? You got the European Union with, negative interest rates and a slowdown in their economy. You just heard from the premier of China that they don't want the yuan to devalue. They said it's going to hurt them, but they're not going to make it up in lost trade, or in gaining trade, I should say. So they don't want their yuan to decline, and because they know how it will hurt the country in so many other ways. Again, they're a huge importer of product as well. So the dollar has no competition, and as I mentioned, they're raising rates while others aren't. So the higher the U.S. interest rates go, the stronger the dollar goes, and the weaker the other currencies fall. So as the trend lines are showing, the Fed is going to raise rates again this month, in December, and possibly 3 or more times in 2019. So the power of the dollar is being pushed up by the Fed chair Powell, I should say, that's pushing rates up.
How much higher can U.S. stocks go, or the stock markets?
It's hard to say. We believe the Trump rally was over, and we said it could go up a little more, and we made that call back in January, and we still believe the same thing. The markets are near or at their peak.
We'll have more with Gerald Celente when This Week in Money returns.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, marijuana stocks are smoking hot right now. Could a bubble be forming in that market?
Bubbles will always form, but with marijuana, we were among the first to call this trend. We did big articles, many of them over the last few years, on reefer money madness. Now, you're going to see the world going legalized. Matter of fact, they just legalized it in South Africa. If the planet could feed us, could it heal us? And that's where you're seeing a lot of the investment money going into. You got a bunch of stupid political morons that made this stuff illegal, ruin the lives of tens of millions of people by throwing them in jail for something that's been on the planet since probably the beginning of time. So no, there'll be bubbles in different companies and things go up and down, but we see this as a long-term trend, particularly legalization is going to escalate because governments need more money and they get tax dollars from it. Same reason they ended prohibition and put booze back in the markets so they could tax it. So, there'll be bubbles, but the long-term trend is growth.
U.S. Customs has said if they ask somebody at the border, do you use marijuana? Have you used marijuana? Do you work in the marijuana industry? Have you invested in the marijuana industry? And if the answer is yes, they face a lifetime exclusion from the U.S. What does that mean, or what does that tell us about the U.S. government attitude towards cannabis?
Well, it tells you about the stupidity, the military mindset of this nation. What kind of moron made up a story like that? I just said how many lives they ruin with these stupid laws and these jerks that love to have power over the people. They can't get off enough on anything, so they keep trying to get off with pushing power onto the helpless people. So, no, it's a stupid thing, and it's the whole Homeland Security moronic police state that we have here. This is just another example of it. But overall, we believe that there's going to become a point where there's going to be legislation in the United States on a federal level that will decriminalize it. Again, these are the power-hungry police state morons that keep pushing these kind of things through. As I said, they ruin the lives of millions of people, these tough guys. He's always these tough guys arresting the little people as they bow down to the big guys and salute them.
The Trudeau government is openly anti-Trump. Is this a good idea when the Trudeau government is hoping to renegotiate NAFTA?
Well, of course it's a bad idea. And, again, Canada has the advantage in terms of how much more money they're making than the United States. So, there's going to be some point when what are you going to do? You don't want to make any more money over here? Or do you want to renegotiate? That's all it's going to come down to. So, whether they like each other or not, it's politics. And in politics, you could lie, you could steal, you could cheat, you could scream, you could yell, and then you'll go against everything that you said and do what you want to do because that's what your word means nothing, your heart means nothing. It just means you want to get as much as you can and have as much power as you can get. So they'll forget about this and move on.
If Canada accepted President Trump's original offer of real free trade with no tariffs, barriers, or subsidies, would Canada be at a disadvantage continually because of high taxation?
No, I think Canada would be at an advantage, actually, in the longer term, because of what you have that we pay for that we don't have enough of. So, in those terms, I think it would be a good deal for Canada.
With President Trump ordering the release of FISA documents and texts, the swamp seems to be in panic mode. Could this affect the markets?
No, it won't affect the markets at all because when they do come out, you could bet your last dollar that they'll be heavily redacted and you won't be able to make sense of anything that was put out, and it'll come in the news one day and go out the next.
President Obama signed an executive order legalizing propaganda against U.S. citizens in America. Should President Trump reverse that order?
Of course. When he was President Obama, too, he took away our habeas corpus rights. And also, back in 2011, on New Year's Eve, when no one was looking, Obama signed a National Defense Authorization Act that took away our habeas corpus rights and gave El Presidente of los Estados Unidos the right to kill any American citizen without any jury, trial, judge, and kill them anywhere and any place in the world, including the homeland. So, Obama was a fraud. The liberals love him, but when you look at all he's done from the Libyan war, the Syrian war, troop surge in Afghanistan, and robbing us of our rights, boy, he was number one among the number ones. And another one that he also did was he gave the NSA more and more authority to spy on we the little people. So this is just more of what Obama did. Will Trump repeal it? Possibly.
We'll have more with Gerald Celente when This Week in Money returns.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, is China's boom turning into a bust?
When you look at China's economy in terms of, for instance, car sale numbers are very weak. You look at their overall investment numbers, they've had the greatest fall off since 1992. When they began collecting those numbers. So China has some real problems. They have a huge debt load, a debt to GDP ratio of about 300. Their currency's in decline, and they're overextended. So you're looking also at the Shanghai indexes in bare territory. And this time the government's not bailing them out. So I believe there's going to be a slowdown in China, a slowdown in Europe, and you're looking at the commodity prices are showing it. You see soft commodity prices in a number of fields, particularly copper, and China uses about 50% of all the copper produced each year. So there's definitely a slowdown going on over there.
Is India turning protectionist?
Not only is India turning protectionist, so too is Pakistan and Indonesia. As their currencies are declining, and again, everybody's making a big deal about trades and tariffs in the United States. They're all putting taxes, raising the taxes on imports. So that's protectionism. And it's self-survival is what it is. And they're going to continue to do everything they can to save their economy and their currencies from declining more.
Is the credit market at the constricting part of the credit cycle?
It appears it is. Again, with $250 trillion worth of global debt out there, interest rates rising, which means the cost of servicing that debt is going to go up, you're going to see some real problems here in the United States. You have massive amounts of consumer college debt in the United States is at $1.4 trillion. And again, look what's going on and how countries around the world are trying to stop the devaluation of their currency by raising interest rates. Was Argentina's interest rate 60%? It's ridiculous. And so we're in a very volatile time right now.
When credit's constricted, does it change the dynamics of the automobile market?
When credit restriction is going to change the dynamics of every market. You look, for example, in the United States, new home building, where, it increased, where it's increasing in multifamily dwellings because people can't afford to buy their own homes. So you're going to see a slowdown in the auto industry globally when interest rates go up in any nation.
How bad is household debt, and how can people ever get out from underneath it?
Household debt is very serious, and it's going to continue to get worse because wages are not keeping up with inflation. And one of the real groups to look at are the baby boomers. You know, they're in their 70s now, and a lot of them don't have pensions and benefits. They don't have jobs. They have minimal Social Security, and they have debt. Oh, and there's another thing, of course, the ridiculous property taxes, school taxes, state taxes, and federal taxes. So they're getting taxed to death. Their earnings have either vanished or have declined, very little in savings. As a matter of fact, in the United States, 60% of Americans have less than $500 in savings.
What does that mean for the boomer generation as they hit retirement?
As we said, the boomer generation, we just did a big story in our Trends Journal on this, calling it boomer bust. And the boomers are going to be busting out in terms of equity, in terms of health. They're in terrible shape. You're looking at the adult population in America, 70% are either overweight or obese. So they're in poor health financially and physically, and then mentally will follow that too, because a lot of them are on very heavy doses of prescription drugs for a variety of reasons. So it's not a very happy ending coming over here.
What's the latest on the health concerns about 5G and cell phones?
Well, the 5G information is really being suppressed, and it's being promoted by the industry, and not really much information out there of how dangerous it is and what it is going to do to the health of people. And again, we've been writing a lot about this in the Trends Journal. I don't carry a cell phone. I have one that if I remember to take it, I put it in the glove compartment of my car. But I don't carry a cell phone with me. I know the dangers of them. The studies have been out, and people ignore them. It's like cigarette smoking. Everybody who smokes knows it's going to hurt your health, but you're addicted to it. And that's what's happened with cell phones, addiction. But the 5Gs, boy, they may be the death nail for many of us if it goes through the way it's being planned.
Do organic foods have healing powers?
Of course. Well, it's not a question of whether or not they have healing powers. You're not putting poisons in your body. So what would you rather do? Would you rather put something that's grown from nature without any chemicals on it, or eat something with chemicals on it, or something that has been also changed genetically and in other ways so that they could grow more of it and make more money on it? So you just want to eat healthy. And again, when I talk about the boomers being in bad shape physically, emotionally, and financially, you want to be in the best physical shape you could be so that you could withstand when the things from left field hit you that you never saw coming, or the problems that have happened, and you could deal with them better when you're in a healthy mind and healthy body.
Is technology causing people to shun regular human contact?
Oh, the numbers are out. Of course they are. Among young people, they'd rather go digital than face-to-face. The new numbers are out, one after another. There's a saying, the meek shall inherit the earth. Well, one of our top trends for 2019 is going to be the geeks have inherited the earth, and they've taken over. People have lost their passion, and they've lost their drive to be individuals, and have become taken over by the mentality of technology and a digitized world. So the metrics have won, and the passion is lost.
Was Britain right to appoint a minister of loneliness?
Another stupid job.
Like the Ministry of Silly Walks.
Yeah, just another jerk being paid for by we the people to do nothing.
What is your latest globalnomic view?
Well, the globalnomic view is, again, interest rates, oil, and war, and how they all tie together and how they're going to affect the global economy. That's one of the big ones we're looking at. The new Trends Journal is going out on Friday, so it's packed full with information from geopolitics to economics to trends and you name it, from what you eat, what you wear, and what you listen to. It's the only place where you're going to read history before it happens. I just got a kick out of this big news that someone bought Time magazine. Time magazine, last week's news tomorrow, and ours is tomorrow's news.
What future trends are you watching?
Well, again, the big ones are that we're watching are the oil prices, interest rates, and the Middle East. Those are our major concern at the moment. And also what you can see, the war mentality of America and how it's hurting the nation by not investing in the nation and investing in war with the death of John McCain, who was a warmonger supreme, and they've made him into this hero. So I ask people the question, okay, he was a hero bombing innocent people in Vietnam on a war based on lies to a country that did nothing to us, killed over 4 million people, poisoned the place with millions of tons of Agent Orange, napalm, and he was involved in dropping those bombs that kill people. Does that make him a hero any more than it would be for a member of the Third Reich who was dropping bombs in Europe and Russia in illegal wars and killing people? And then that member of the Third Reich became a POW? Does that make that person a hero? The point that I'm making is America celebrates its illegal, immoral, and criminal wars and celebrates the warmongers that fight them. And that is going to lead to the ultimate moral and financial destruction of the United States.
What's new with Occupy Peace?
Well, next year we're planning on launching an Occupy Peace festival, having music, entertainment, vendors, food, arts, crafts, and speakers. And matter of fact, I was a speaker down at Ron Paul's event in Washington, D.C., and you could go to his website, Ron Paul's, and you could see, or go on YouTube and put in Gerald Celente, Ron Paul, and I was one of the speakers there. So we're very much involved in trying to push the peace movement forward, and I believe it has to be done with more than just, people that are interested in it, and to make it more of a festival so it becomes more of a mindset and a way of life rather than looking at it as an agenda, because with peace comes joy and beauty, love and liberty.
How can people find out more about Trends Journal?
Just go to trendsjournal.com, trendsjournal.com. History before it happens.
Gerald, thanks for being on This Week in Money.
Thank you, Jim.
My guest has been Gerald Celente, publisher of the Trends Journal, online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Wall Street Window's Mike Swanson, next on This Week in Money.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. My guest is Mike Swanson, editor of wallstreetwindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Interesting couple weeks for sure.
The last few weeks on the stock market, what kind of trend are you seeing?
Well, I will say, during the summertime after the Dow took that big hit in January, I thought we could be seeing a top being formed that would have led to a break below the 200-day moving averages and declines. And we've seen actually declines in markets around the world, emerging markets, China, Turkey, even many of the European markets have done this, but the United States market obviously did not. And in August, we kind of broke out, so to speak, instead of down. And one of the things that's been happening is that one of the things that was concerning me in the summer was that tech stocks were lagging. We saw many of the leader stocks, such as Facebook, in fact, actually blow up, Intel did it too. Netflix is now lagging. And Tesla, of course, is having problems, but the tech stocks in general are lagging the other averages now. The S&P and Dow doing better than the NASDAQ. And what has happened is money is starting to flow into other sectors and making them come to life. So, for example, in the past week, Boeing broke out to a new 52-week high, which is one of the biggest components of the Dow, helped lift the Dow up. But the defense sector as a whole also is surging, and so is an industrial ETF, VIS. It made a new high too, and it's got about 500 stocks in it. And bank stocks are also in a position to kind of lead now too, going into the end of the year. So with the market averages, showing new strength again and money flowing into new sectors, the tech stocks don't really have to drive the market, as they were before. And I think, for the rest of the year, I'm not really expecting a significant stock market decline, with the United States stock markets, although other markets are underperforming.
With the emerging markets having problems, are they in a position yet to offer bargains?
Well, I would be patient. In fact, it's interesting. Turkey, of course, is the one that really got people's attention in August when it blew up. And they've had to raise interest rates in Turkey over 20%. An interesting thing about Turkey is if you look at the valuation of the cyclically adjusted PE ratio, which is the 10-year annualized PE ratio adjusted for inflation, in the U.S. market, it's over 30. I think it's like over 33, in fact. It's at the second highest level in history. The only time higher was 1999. So by any measure, it's overvalued. Of course, that's nothing new, but with Turkey, it's at 8. And you gotta really look at Russia around 6 to find anything smaller. And Turkey is one of the biggest economies in the world. So from a valuation standpoint, there actually are attractive stocks and markets to invest in, stocks inside these markets. There's a Turkish telecom company, goes by the symbol TKC, United States. But all that said, I don't think the emerging markets decline is over with. I think we're just getting a bounce in September, and I expect they're going to continue lower maybe next month after the Federal Reserve raises interest rates again. So I think it's a story to be patient with. But I think in the end, maybe by the end of this year or the first half of next year, there will be a great buy point. And I'm someone who likes to buy into situations like that. In fact, I did it in 2012 with Greece when they had made the news everywhere for blowing up. But I think actually the opportunity to invest in Turkey and in some of these other countries, I'll list Argentina as another one at some point, is actually going to be a better opportunity than Greece was, because these countries have their own currency. Greece is trapped in the euro, so it never really has been able to fully recover and get out of the situation it got itself into. Whereas in time, these other countries will. And it's a process of basically printing away their debt by letting their currencies go down the drain. And that's what's going on in Turkey, Argentina, to a small extent in South Africa. And now I think it's actually starting in Egypt this month, or actually this week. Egypt fell over 10%, the Egyptian stock market. So I think it's breaking down just like Turkey did last month. But generally, I think this is sort of like the 1997. There was an emerging market crisis in Asia in which multiple countries blew up, and it took about a year for that to work out. And this crisis really began in June when these markets broke their spring lows. And I think it's at least going to continue into the end of the year. So it's something I'm watching and excited to eventually be a part of, but I'm just patient for now.
Mike, what do you see ahead for crude oil?
Well, this week Saudi Arabia came out with a statement saying they'd like to see crude oil go at $80 a barrel, and they said that on a day, 2 or 3 days in which it dipped. So I actually think we could be seeing a top being put in with oil, in which it could go a little lower into the end of the year. I don't mean it's going to crash or anything, but if it doesn't get above 74, which was the high, $74 a barrel was the high in July, I think it'll be going down after, this month, going into the end of the year, because seasonally, that's what oil tends to do. It tends to rally in the summer, dip in the fourth quarter. There's also historic sized commercial short position that was built up a couple months ago that really needs to be worked off. And I think the emerging markets in the global economy are slowing down, and there's likely to actually be a global recession. The global yield curve also inverted in June. That typically signals a recession 6 to 12 months out. Now, the U.S. yield curve isn't inverted yet, so in the United States and probably Canada for that matter, in Europe, we'll probably still see positive economic growth, but the slowdown in emerging markets in Asia and China, I think, it's causing weaker commodity prices already, with agriculture commodities that seem to make a new low every week. Copper, of course, has been weak, and we saw a drop in August in gold and silver, of course. So I think oil is likely to follow these other commodities down. So I'm just watching oil, basically, and I'm not interested in right now investing in it or energy stocks, but it could be something down the road. It's not to mean they're going to completely crash or something, though.
Is uranium something to be looked at right now?
Well, a lot of people like to trade uranium and uranium stocks because they can be so hot. Cameco, for example, earlier in April, it went from $9 to over $12, and now we've come back down to right below 10. So I think we're still in this sort of sideways phase with the uranium stocks, and I just think they're consolidating and probably going to continue to do that until we see, bigger rallies in gold and silver. I think this month we're seeing a recovery rally, but I'm not convinced that it's going to be, another giant rally like we saw 2 years ago. And until that happens, uranium might just kind of continue to float around like this.
With Canadian legalization of pot on October 17th, are marijuana stocks hot?
Well, they're the hottest thing in the markets. It's absolutely amazing.
So, Mike, would an example of this be Canopy Growth?
Oh, yeah. Canopy Growth was around 27.5 a month ago in the middle of August, and now it's over $50. It got above 55 actually in this past week. There's another one, for example, on the CSX called FSD Pharma, and it's over 70 cents, and it was 12 cents a couple months ago. And in the United States, the talk of the markets all over Twitter was a company called Telray, which IPO'd in the United States in July around $20, and it went over $200 this past week. So some of these stocks are moving like the cryptocurrencies were doing a year ago. It's absolutely amazing. So this is the hottest thing in the market, and there's talk that there's going to be more IPOs coming out. I suspect there will be. And so this is the hottest thing. I mean, at some point though, I do think it's a bubble, and these things will probably, they're not Bitcoin. They're not going to, they're not worthless like I think cryptocurrencies are, but they'll obviously at some point pull back 50% or even more.
And of course, too, we have people like Aurora rumored to be talking to Coca-Cola about pot-infused soft drinks, and that's an interesting market.
Yeah, and that's the real difference between marijuana stocks and cryptocurrencies, because these marijuana companies, they actually do something. And they can make deals with other companies such as Coca-Cola. There's another, I don't remember which one off the top of my head, but there's another marijuana stock that is making a deal with Constellation Brands, which, helped its share price. Whereas with the cryptocurrencies, they don't make deals. They just, float around, and it's just a bunch of nonsense. So, and that's why these stocks are able to attract a lot of trading action all over the world. It started in Canada, but now it's come to the United States, and the volumes are exploding. There's real institutional money behind things like Tilray, and so forth. And, I don't see any sign that it's ended this week. So it's interesting to see something like this develop in the financial markets. And it's a sign that, we're not on the verge of a stock market crash. I do think there were danger signs this summer, that blinked a couple times, but they now we got a green light basically.
It's kind of a monkey wrench in the marijuana business. We've heard that U.S. customs authorities are going to be asking people, do you work in the marijuana trade in Vancouver? Are you an investor? Are you involved in it in any way? And if they are, they'll be banned from traveling to the U.S. for life. Is that going to discourage people from investing in marijuana?
Well, I don't know how many people, I know that story. I don't know how many people know of it though. So if people don't know about it, it won't discourage them. But that said, I think if someone's investing in one of these stocks or has them in their portfolio, it's nothing to worry about. However, if you are on the board of directors or an insider, I would worry about it, because I know, of people who have traveled in the United States from Canada, and you can be questioned about, being on this or that company and whatever. So it's probably a very discouraging thing that's in the news, but it is what it is.
We'll have more with Mike Swanson when This Week in Money returns.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Mike Swanson. Mike, the Premier of China has said they will not devalue their currency amid the trade war with the U.S. However, have they devalued it in the past?
Yeah, they actually did. I should put it this way. A few months ago, during the summertime, when this tariff controversy started, their currency dropped. And having their currency decline is a way to compensate for tariffs. But when that happened, they denied that they caused it. So did they cause it or not? Who knows? They deny it, but it did drop. Now, I think what people need to take away, though, from what's happening with this trade war is, right now the stock market has gone up this week, and the trade war is obviously intensified. Trump said he's doing the 10% tax on $200 billion worth of imports. The other month he said it was going to be a 20% tax. So by saying 10%, he's starting smaller. However, he said he's going to boost it up to 25% at the end of the year. And the Chinese really don't have a way to react by retaliating in kind, because the United States isn't exporting the same amount as we import. So they can't just make tariffs to react. But I do think they will react at some point. And this is the point I want to make, is that I think this is just the start of something that could last for 2 or 3 years. And instead of just thinking this as tariffs, Trump putting tariffs to try to negotiate or do this and that, first of all, there's no evidence that we know, or the Chinese, for that matter, know what Trump actually wants. Is there anything the Chinese can even do that would make Trump stop the tariffs? And there's people inside the Trump administration who want the tariffs to be a permanent mechanism against China. And the guy creating them, this Robert Lighthizer, said that he wants China to stop their industrial policies and basically change their whole economy, which is not going to happen. And I think a way to look at this is to think that, okay, the Chinese economy is surpassing the United States as number one in the world. They're obviously gaining influence as a competing superpower. And I think, right or wrong, this is Trump's reaction to that and the people around Trump. It's not a unified reaction across the United States. Obviously, much of the business community is against it, and so is much of the foreign policy establishment. But this is what Trump and his people are doing. Now, China has not been prepared for this. Last year, China was trying to make friends of Trump, and that was how they're going to deal with it. Now, that obviously did not work. So, what I want to suggest is that China will at some point react. However, they're not doing it today. They're probably not going to do it next week. And they're going to do it at a moment of their choosing. And what history shows when it comes to China is that when they react in foreign relations, it's usually shocking and brutal, and it really takes people by surprise and becomes very scary. So in 1962, during the Cuban Missile Crisis, China invaded India and it took large portions of their territory. There was a border dispute that was going on, and they took advantage of the Cuban Missile Crisis and launched a full-scale invasion. And India actually had to give in, and China retreated across the borders, but it was a terrifying event. And after the Vietnam War, or after the United States' war of Vietnam, around 78 or 1980, the end of the 70s, China was in a dispute with Vietnam over their opposition to Pol Pot in Cambodia. The Chinese were backing him and the Vietnamese weren't. And China invaded Vietnam. We don't know that much in the United States, but they did that. And it was a brutal battle. I'm not saying China's going to start a war or something, but I'm suggesting that when the time is right, they're going to react. I don't think it's going to, it could be by there's, who knows how. I mean, it could be by selling the U.S. bonds down. It could be by making their currency drop, something targeting our debt or the U.S. dollar. But if they're going to wait to do that at optimal time when that would probably work. And right now, I don't think it's a good time for them to do it because the U.S. dollar is actually benefiting from the weakness in emerging markets and in Turkey and in other parts of the world. It's causing money to go in the United States, the U.S. bond market. So it could be when these crises in these emerging markets work out that China will then give some sort of reaction. And it could be, so I'm saying it could be a year from now. We're in a moment where I think people are very optimistic or dismissive that the tariff situation is going to matter to the United States or the U.S. stock market because it's not doing so. And they think, oh, Trump's just going to win some negotiation. But I wouldn't count China out, and I think they'll do something in a year or two that will really take people by surprise. Probably not militarily, but economically. I think this is an economic war, not a war of guns and airplanes or something. So I think that'll be something we'll be talking about in the future one day.
Do you think U.S. consumers are going to react strongly when they start to see all their prices for everything from backhoes to, garden hose go up in price because most of that stuff comes from China?
Well, it's going to be tough to say because by making the tariffs start at 10% and not go up to 25% till the end of the year, I suppose I don't think there's going to be that big of an impact at the Walmarts and so forth, and it could give companies enough time to adjust their supply chains and maybe start to import from other countries such as India or Mexico or who knows where. So it could be that there's enough of a time that it doesn't have such a big impact. But if it does have an impact next year, once it gets to 25%, and there's lots of other reasons that, prices can go up too. If the dollar was currently in a dollar rally, but once the emerging markets bottom out, I think that could reverse. And at some point the Fed's going to stop raising interest rates too, and the dollar rally will probably that'll be another reason for it to go into a bear market, and that will create inflation. So I think we're in a kind of a deflationary actually moment in the United States, but next year we could start to see the reverse. And when the thing is about inflation though, is a lot of times, there's no real general consensus of why it's happening, and people can look at 10 different reasons and not, there's rarely a common understanding of what would be the cause of it. So I don't know how people will react. I mean, will they blame it on tariffs or blame it on the Federal Reserve or blame it on currency manipulators? I really don't know. If you look at what happened in Turkey last month, their currency, of course, is collapsing, and the Turkish leader, Erdogan, I watched him on TV blame the entire thing on Trump and the United States, which, I don't really think is true, but I guess the people in his audience believed it.
We'll have more with Mike Swanson when we come back with more This Week in Money.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Mike Swanson. Mike, India has the fastest growing economy in the world at around 8%. Is that a place people really haven't been looking at much?
Well, they certainly haven't. American investors certainly haven't. And frankly, I'll tell you, I really haven't myself either. But it's an interesting, it's one of the BRIC countries. And I think it's actually one of the best performing markets in the world. I'm just pulling up a chart. But we get so busy looking at what's happening here that we miss out on what's going on elsewhere. And personally, that's a point I'm going to try to make for myself, probably next year, is to really spend a lot of effort to invest outside the United States. At the moment, I really don't have any investments outside, the United States, unless you count Canadian stocks. But, right now, it's easy to do that if you're an American because the dollar is going up. The U.S. is one of the top performing markets and so forth, while so much of the other markets around the world are below their 200-day moving averages. But I think this is going to flip in reverse probably next year or starting next year, in which the U.S. will become a laggard and the rest of the world will, for the most part, be better. And the dollar could go into a bear market. And if there's a situation where China does something, who knows, it could really destabilize U.S. investing. So places like India, might be a good place to put money, and I might be putting up to, a third of my portfolio in investments overseas. So, I think India is something not to ignore.
What about Russia and China trying to form some kind of economic union or alliance?
Well, Russia is another place that's also very attractive from an investment standpoint also because it also has a low cyclically adjusted P ratio. I think it's below 7, one of the lowest in the entire world. So from a valuation standpoint, Russia is very attractive. And historically too, when the U.S. has tensions with both, the two start to work together. That's what happened in the 1950s and early 1960s, for example, at the beginning of the Cold War. And it's already starting to happen. They've done joint military maneuvers together. So it's only logical for them to begin to work together. But from an investment standpoint, today, I would suggest that Russia is the more attractive of the two just because of the valuation standpoint there.
Mike, what do you see happening with interest rates around the world?
Well, I think right now the United States is still on track to continue to raise interest rates. We have a rate hike coming up at the next meeting, and then it almost seems certain now there's going to be one in December. However, the global yield curve is inverted, meaning that long-term rates are actually lower than short-term rates for almost the rest of the world outside the United States and Canada. And when that happens, rate hikes don't happen anymore. In fact, you get lowering interest rates. So I think that's really the trend going forward over the next couple of months is the U.S. continue to raise rates, the rest of the world not doing so. And that's why the U.S. dollar is going up in strength. That is probably also a reason why the gold prices are still below 1,300 and kind of going sideways or trading a little weak. But we're not that far from the U.S. yield curve getting inverted too. It's only about 0.3 basis points away. So unless that changes, it would seem that within the next 3 to 6 months, we're going to have the last rate hike in the U.S., and then we'll be facing a completely new monetary cycle, which would, cause gold to really take off and the dollar to probably go into a bear market. Whereas at the moment, this situation is why the U.S. It's also probably has to do with why the U.S. stock market is doing. One of the reasons why it's doing so much better than most markets around the world is because we're raising rates. The dollar's strong, so foreign investors benefit when the U.S. dollar is going up if they got money over here. However, I think this is not a permanent situation, and when it comes to an end, it's basically going to reverse.
Mike, before we go, can you tell us a little bit about Wall Street Window?
Yes, certainly. Wall Street Window is a financial website I run. I edit it, but I do most of the unique content on it, and typically have something once every single day. And one of my main focuses is trying to figure out what are the best performing sectors to invest in and trade. And of course, over the years, I've got a unique, for an American at least, interest in investing in gold and mining stocks too. So I talk about them quite often.
Mike, before we go then, what do you see happening with gold and mining stocks?
Well, they of course, were going sideways for a very long time, with support on the GDX gold stock index around 21 for almost a year and a half. And then in August, it broke down and went below 18. And this month we're kind of bouncing back up. But I think it's going to take more time. We just took such a big hit in August, and it takes typically time for that to recover. So I'm thinking we're going to go sideways to down. It doesn't mean it's going to crash, but just continue to kind of trade weaker than the U.S. stock market going into the end of the year. And I'm thinking, the way things stand now, probably after the December Fed rate hike or the first quarter of next year will be when they really turn around and begin another big rally. So I think we're just in a kind of a base building process ahead of that. And same thing with gold and silver prices.
Mike, thank you so much for being on This Week in Money.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Mike Swanson, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for Company Showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Welcome back to the show, Larry.
Well, Jim, it's always a pleasure to be on the show.
You just came back from Cambridge House. What was happening there?
Well, Cambridge House has 2 shows a year. We usually attend them because we don't have any traveling or hotels involved or anything like that, and it's usually a pretty good show to go to. It's an investor show, and surprisingly, it was a paucity of actually mining companies and more to do with technology and cannabis that were at the show. And so we fit in to both those camps. We're solidly in both camps, in mining and in technology, with our recycling program. So I was quite impressed with the attendance. It wasn't huge, but it wasn't really small and sparse either. It was people that were there were interested. We had a lot of action at our booth on Wednesday. That was our busiest day, and I also had, several meetings in what they call the meeting room with a lot of funds and brokers, and there was a keen interest in what we're doing there. So I expect that we planted quite a few seeds and that they will germinate and grow. The interesting thing about the show is that it tells me that, hey, we have to get out to these investor shows. I mean, we've been on Bloomberg and Reuters, and we've been all over the world, presenting at battery shows that we've been invited to, and just a little more on that. For every show that we go to, there's at least 3 or 4 that we don't, and because we're invited to present. I feel that, as the audience gets more more repetition, then at every show you go to, you see the same companies, same representatives. And now it's time to focus on the investing community, and that's what we're doing. So we had a very busy agenda with the meetings away from the booth. And I did a presentation on the company, and I was also sitting on a half-hour panel. And so we got really keen exposure, and, we were decently attended in all of those things. So I think it was well worth it, Jim, that we attended that show and managed to get the message out to a lot more investors out there. I found there was quite a mixture of investors from funds, brokers, deal makers, and investors. Investors from looking at the aspect of the green technology and how we were working with the environment. And we had a circular economy. That seemed to be a big interest to a lot of people. And, of course, looking at the stock is perhaps being in a good range to buy it. And, so it's just a matter of, getting the word out and knowing that we are well received at every show that we go to. So it's, it's a slow process, but it happens, and, we will reap, and so will the shareholders reap the benefits of it. There's been a lot of things happening. Cannabis has been tearing up the market, but the last few days have been pretty tough on IPOs in the cannabis area. That's kind of showing you that the shine is coming off, and maybe investors will start looking for alternatives to buy. I mean, some of them are sitting on huge profits, and they may swing into technologies and especially into recycling. So our next show is going to be in New Orleans, and that's going to be, oh God, I'm just trying to recall the date, in November. And so, maybe we'll get a chance to catch up on our work because we do have a very lean and mean crew here. We've got a corporate secretary, we have a chief technical officer, and we have the chief financial officer, and they're flat out busy all the time, and myself, and so it's lean and mean, and we're on top of everything. So that's kind of the way I like it. I don't like to have a huge staff. Pretty soon you kind of lose track of who's doing what or if they're doing anything, and so it's a different management approach than I've had in the past few decades. So it's more work, but the days fly by, and the rewards are still coming. So other than that, the recycling market seems to be moving ahead out there. There's people that are involved in repurposing, recycling throughout the business. So Apple's been the big news in the last week and a half with their Daisy disassembler and the Liam still in the background. Those sorts of things only shine a picture on what we're doing, and because it's we are, and I have to say this, we are the most advanced recycling opportunity out there. We're certainly that we know of. I mean, there could be things happening in privately that we're not aware of, but we can't find anything that makes the recoveries that we do from our cathode material. So, Jim, that's it's been a busy week and a lot of traveling involved and heavy traffic, and so it's that's my message out there is that the company is still progressing and moving ahead, and I'm hoping it's dependent on certain approvals and everything else. I'm hoping to come up with some announcements very shortly.
Larry, where's American Manganese traded, and how can people find out more information about it?
American Manganese is traded on the Toronto Venture Exchange under the symbol AMY. It's traded in the U.S. under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. You can find all the information you want at our website, AmericanManganeseInc.com, or you can contact us at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thanks a lot.
Thanks, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on September 21st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much, Jim. Good to be here.
Good progress happening for your company in BC's Golden Triangle?
Yeah, things are moving fast, other than the assays. But as far as the speed with which we're moving, the drill rig and that, it's pretty impressive. But everybody up there knows you're up against a timeline and access to water, et cetera, et cetera, et cetera. So it's, we've had to add to the crew, bring in more splitters, because they're progressing pretty good.
Can you explain that? Sounds pretty technical to me.
Well, yeah, it's just the the water lines, as the glaciers start to refreeze, which they're just kind of at the beginning to do. The water, because our water supply is glacier fed, and what'll happen is they'll refreeze, and then the water stops coming down the mountainside, which we're kind of reliant on, and then the creeks down below dry up. Just the natural thing, unless you can tap into some rainwater supply in pools. Not really easy for what we need, but, we'll see. We'll see when we get there. I think we're good for a while longer, no question.
How much have you drilled so far?
Well, we've got to be close to the high 30s in terms of holes. We're getting very close to 10,000 meters, which is what we'd announced it. We're shooting for that, doubling what we initially intended. We're getting close to that, and we'll see what the next few weeks bring.
You said you're waiting for assays, but roughly what do you think you've discovered?
Well, you can't get into too much detail there, but yeah, we are waiting for assays. We've been waiting for complete holes, and we're just about there. And I think probably the first batch we'll put out will be might have maybe up to 8 holes in it, in the initial area that we were drilling in. But we'll see. That's coming out hopefully in the next very short period.
For new listeners, can you maybe tell us about Aben Resources?
Well, Aben's it's a junior gold exploration company. We've got 3 projects. Our main focus is the Golden Triangle, and then we've also got the Justin property in the Yukon and the Chico property in Saskatchewan, which allows us to spread the drilling out throughout the year, rather than just having the one season up in the Golden Triangle, which, can literally be 5 months long, and that's it. It's very difficult after that to drill, to work because of the snowfall and the inclement weather, and it gets dark, and we're helicopter support. So,
can you tell us where Aben is traded?
Aben is traded on the Toronto Stock Exchange, the TSX Venture Exchange, under the symbol ABN. It's also traded in the U.S. OTCQB markets under the symbols ABN.V, and Frankfurt under the symbols E2L2.
And for people interested in finding out more about Aben, where can they go?
Well, you can check our website out at abenresources.com. You can contact here at the office. There's Don Myers at 604-687-3376.
Jim, thank you so much for the update.
You bet. Thank you very much.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on September 17th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.